Hello, everyone, and good evening. Welcome to tonight's webinar, Understanding How Special Needs Trusts and ABLE Accounts Can Be Used. Without further ado, I would like to introduce you to Casey Stevens, Director of Trust Services at Midwest Special Needs Trust. Welcome, Casey.
We are going to talk about understanding how special needs trust and ABLE accounts can be used. Again, my name is Casey Stevens, and I'm the Director of Trust Services at Midwest Special Needs Trust. I've been here almost 12 years, and I've been working with the St. Louis ARC just about that long. So I'm really excited to be able to talk about this tonight. I know it's an important topic, and there are lots of questions. So this evening, we are going to talk about what is a special needs trust and what is an ABLE account. I am not going to spend a ton of time on this. I want to make that real clear that I'm just going to give brief overviews of both special needs trust and ABLE accounts, because we're going to spend the bulk of our time talking about distributions from each of those types of accounts. So distributions from a special needs trust and distributions from an ABLE account. And then we're going to spend a little bit of time comparing the two. When is one better versus the other, and how can they work together for the benefit of the individual with a disability? And we'll try and also just kind of stop at certain points and check in with Ann to make sure that we have answered any questions, and then make sure that nobody's kind of lost in the way on our way through this. So what is a special needs trust? A special needs trust is established for the sole benefit of the person living with a disability. It is a financial planning tool available to individuals, families, and friends, and it is utilized for supplemental needs, not basic support. And that's a big question mark, right? Why are we here? We're going to learn about what supplemental needs are and what basic support is. They are governed by trust language and applicable statutes. Special needs trusts are considered an exempt asset. That means they are not counting when Social Security, Medicaid, food stamps, and HUD housing are looking at an individual's resources or assets. There are three types of trusts. There are first-party trusts, which are funded with the individual's own funds, meaning if an individual has receives a personal injury settlement, they can put those funds into a first-party trust and maintain their eligibility for SSI and Medicaid. There are third-party trusts, which is someone else's funds for the benefit of the individual, meaning mom, dad, grandma, grandpa can put funds into a third-party trust, and that individual is not going to lose their eligibility for Medicaid or SSI. And then there's pooled trust, which is a nonprofit trustee. That's what Midwest Special Needs Trust is. A pooled trust administers both first parties and third parties, but there's also a charitable mission to what they do. Special needs trusts may have age limits. I'm not going to get into them. They may have initial contribution limits, meaning some pooled trust administrators require a minimum amount to open a trust. All banks have a minimum amount. Some attorneys have a minimum amount, and those amounts can vary between $500 and $1 million. So there are initial contribution limits. And then we have special needs trust administrators absolutely have distribution standards. There are requirements on what the trust can and can't be used for, and Social Security has made those requirements very, very clear. So we're going to talk about what those are, and then what is an ABLE account. So we're going to compare. Like I said, I was just going to do a brief overview. What is a special needs trust and what is an ABLE account? An ABLE account isn't available as a financial planning tool for persons with disabilities and their families. It is very similar to a 529 college saving plans. And when I say very similar, I mean almost copy and paste. It provides autonomy and independence for individuals. They're making the decision on how to utilize those funds. There are some age limits to it, and there are some contribution limits. Individuals must be disabled before the age of 26. That is changing in a few years, and it'll be 46. But for right now, it is 26. You can have one account per person, and contribution limits are $17,000 in deposits per year, meaning you can't deposit $17,001 in 1 year. You have to, it is just 17,000 unless the individual is working, and then they can add up to 14,580 into their ABLE account. Exempt asset for Medicaid, HUD, and food stamps. And it is also considered an exempt asset for SSI unless the balance reaches $100,000. And then the SSI is suspended. It is not terminated. It is only suspended. So when it falls right below $100,000, the SSI comes back. I want to stop here, Anne, and make sure that everybody is on board of the difference between a special needs trust and an ABLE account, so that I don't lose anybody.
The only thing I have so far that may affect your questions now is, how does a beneficiary qualify? And I'm assuming that means for either
Yeah, that's a really good question. So for a special needs trust, there is no requirement by the Social Security Administration for them to be considered disabled to have a special needs trust. But why would you, right? So you're maybe planning for your minor child and they may not have been deemed disabled by the Social Security Administration yet, and that's fine. For an ABLE account, the requirement is a disability as determined by Social Security or a doctor's release that says this person is considered disabled. A little bit different. Special needs trust, you don't have to be considered disabled to start one. An ABLE account, you need to either be considered disabled by the Social Security Administration or have a doctor's note.
And then the next question is, can you have both an ABLE account and a special needs trust? And yes, you can.
Yes, you can. And we're going to talk about how we can do that.
All right.
So we are going to move on to the exciting part of tonight, which is distributions. We're going to first talk about distributions from a special needs trust, and then we're going to talk about distributions from an ABLE account, and I'll stop in between both of them to make sure that all questions have been answered. So distributions from a special needs trust are broad. This list is not exhaustive by any means, but these are the types of things that I see on a regular basis. So allowable distributions include medical expenses, therapies, education expenses, clothing, non-food grocery items, all of those household items that just add up, cleaning supplies, toilet paper, bar handles for the shower, all of those things are allowable expenses. Durable medical equipment, transportation, including a vehicle, fuel, and modifications, personal property, travel expenses for the beneficiary and another person, home modifications, all telecommunications, hobbies, entertainment, camps, and what we're going to touch on this more. So but I want to point it out here is distributions to an ABLE account are an allowable expense from a special needs trust. But you can see here that anything that is considered a supplemental need is an allowable expense. And we kind of broadly, like I said, we broadly define that. Our purpose is to make sure that it is for the benefit of the beneficiary. And so this list allows for us to make decisions as trustees to determine that these are for the benefit and for the supplemental need of the beneficiary. I do have a list, though, of things that are not allowable. And the not allowable includes housing. And by housing, I mean rent, mortgage, and room and board, and utilities, water, gas, electric, sewer, and trash. These are defined by Social Security, and they make it very clear in their rules that if a person is receiving SSI, they may not have a distribution from their special needs trust for housing expenses because it could cause a reduction in their SSI. Food is also in there, no food. So I like to tell people I can pay for the movie, but I can't pay for the popcorn. We also can't give cash to the individual. That counts as income. So I can't write a check to an individual, to the beneficiary, even if it's $25. I can't write them a check. We cannot make gifts to others. So because it is for the benefit of the beneficiary. So even though we want to buy everybody a birthday present and we want to get everybody, all of our caregivers, Christmas gifts, we can't do that. You can't utilize a special needs trust for that. Some trustees have additional rules. They don't allow for gambling or weapons. They don't allow for homes to be purchased or funeral expenses after the death of the individual, and that varies by trustee. That is a list of not allowable is so much shorter than the list of allowable. The number of requests I see and have seen over the last 10 plus years includes prom. I've sent many young adults to different kinds of proms. The number of trips that folks have taken to Disney, those are all allowable expenses. I recently sent somebody overseas and paid her way to be a missionary overseas in China. I've education expenses to go to college or to pay for somebody's first apartment, their needs, their dishes and their silverware and their cleaning supplies in their first apartment. All of those things are allowable. Anything I can do, or as a trustee, I can do to enhance or provide a benefit to the beneficiary, I am going to do. One thing I want to say about housing, and it's specifically related to room and board, is if an individual is living in a facility, I can pay the difference between a private room rate and a non-private room rate. So I can pay for somebody to have a private room if they're paying their Social Security, and then that little bit of extra that allows for them to have a private room, I can pay that private room differential, which is a great way to utilize trust funds for somebody who may be older or for somebody who is of a younger population but may need to live in a facility for whatever reason. They don't necessarily have to live with an older population. They can have a private room. Some of the things to keep in mind when we're looking at distributions from a special needs trust: it must be for the primary benefit of the individual. Making distributions for housing, food, and cash can impact benefits. And trustees have the ultimate decision regarding distributions. We may consult with co-trustees or trust advisors or the beneficiary, and they may request they want things. And ultimately, as trustee, we have that decision. Special needs trusts are reviewed by the Social Security Administration, Medicaid, food stamps, and HUD housing. So all of these government agencies can call or send letters and say, we would like to look at the special needs trust, and you need to submit the special needs trust and all of the distributions. The trust agreement may be exempt, but the distributions can impact benefits, which is why the concern really lies in what kind of distributions are you making, and are they for the benefit of the beneficiary? Again, that list of allowable is so long that you can probably pay for somebody's expenses that are not housing and food expenses so that they can meet those expenses with their monthly cash benefit. I didn't mention this, but we can pay for all pharmacy bills, items not covered by Medicaid and Medicare. The hearing aids that Medicaid pays for aren't great, right? So maybe you want the trust to pay for better hearing aids. I have purchased quite a few wheelchairs that Medicaid maybe was going to pay for a wheelchair, but it was not going to be good. And so the beneficiary and the co-trustee and the family came and said, Casey, can we get a better wheelchair? Yeah, absolutely we can. So the special needs trust can be used to enhance the beneficiary's life and to provide for their supplemental needs. One thing I didn't mention, and it is on my slide, is the importance of purchasing an irrevocable prepaid burial policy. I can't tell you enough that if you have a special needs trust, please, please, please purchase a prepaid burial policy, because not every trustee is going to be able to pay for funeral expenses after the death of the beneficiary. So you're going to want to have to purchase that. with those trust funds. There is no upper limit in Missouri. I've seen funeral policies range from about 5,000 to 25,000, and we don't want that burden on the family. So if there are funds available in the special needs trust to purchase that policy, please do so. If you have questions about that, I'm happy to answer them. But I will get off my soapbox about prepaid burial policies and ask if anybody has any questions before we move on to ABLE accounts.
Yes, there are several. So the first question is, how is a special needs trust different than just a plain vanilla trust?
Oh, very good question. So a special needs trust has provisions in it that say what it can and can't be used for. It also has provisions in it that it's going to protect public benefits. And then if it's a first party trust, it has provisions in it for a Medicaid payback. So a standard old regular family trust is not likely going to suffice and pass Social Security muster on if it's a special needs trust or not.
However, if that person is working full-time, then at some point their protection from Medicaid and SSI is moot, correct?
Correct. And the special needs trust can remain and maybe make different types of distribution. So if someone's no longer on public benefits like SSI and Medicaid, and the special needs trust is needed to pay their rent or food or whatever may have been on the list of not allowable, the special needs trustee could make that decision. There is the chance that the person would have to go back on public benefits for whatever reason. Either they stop working or their circumstances change and they're not working as much and their income is no longer impacting. And so we never want to just close or not use the special needs trust when somebody is no longer considered disabled by the Social Security Administration. It can still be used for their benefit and just in a different way. These are fantastic questions. I'm so excited. Okay, so we're going to move on to distributions from an ABLE account. And distributions from an ABLE account differ a little bit from distributions from a special needs trust. So we have, and this was taken directly from the ABLE accounts website. So I didn't kind of make these up or decide what they were. They are living expenses, education, housing, transportation, employment, technology, support services, health prevention and wellness, financial management and administrative services, legal fees, oversight and monitoring, and funeral and burial costs. And then it says, and more. And I think that's the treasurer's office saying this list isn't exhaustive either, right? We don't see on here clothing, but clothing is a perfectly allowable expense from an ABLE account. We don't necessarily see on here vehicles. Vehicle is an allowable expense from a special needs trust, from an ABLE account. The only thing that I've ever seen come across my desk in the way of an ABLE account and a distribution is maybe vacation. So you don't see on my icons, you see I don't have an airplane. Probably the vacation for the beneficiary and maybe the vacation for one other person would be allowable, but it really is dependent on how you are classifying that in the ABLE account rules. And we're going to go over those right now. So this list also not exhaustive. It is a little shorter than my special needs trust list, but it also isn't as detailed. So important things to remember. Distributions from an ABLE account are called qualified disability expenses. So the purpose of those distributions are to improve the health, independence, and quality of life. When making a distribution from an ABLE account or making a qualified disability expense, you want to make sure it meets those three categories: health, independence, and quality of life. If it doesn't fit into that, I'm not sure that it would be allowable, but I'm not the one making the decision, right? So we learned that ABLE accounts are done by somebody other than a trustee or a co-trustee, or it is administered by the person themselves, you want to keep your receipts. ABLE accounts are reviewed by the Social Security Administration, Medicaid, food stamps, HUD housing, and the IRS. So we've added an entity there, and the IRS can review distributions from an ABLE account. They will determine if the distribution was a qualified disability expense. If it is determined it does not meet the guidelines, there will be a tax penalty. The tax penalty is minor. It is a 10% of the distribution amount. So the distribution maybe won't impact benefits such as it would if it was from a special needs trust, but it is going to have a tax liability to it. And you want to make sure that when you are making decisions around an ABLE account, that you are making decisions that it is a qualified disability expense. The nice thing about ABLE accounts, and it is so important to remember, is that they can pay for housing. So if you're looking for a way for somebody to be able to pay their rent, and mom and dad want to fund an ABLE account for an individual, they can do that. And then the individual can pay their rent every single month. And that's very, very different than a special needs trust, right? So you can have a special needs trust over here, and every year you can say, I want $17,000 to go over to the ABLE account, and then use that ABLE account for rent, which is absolutely wonderful, because I've told people for many years, I can't pay your rent, but I do have this other way that we can possibly still afford your rent and still not impact your benefits. So distributions from an ABLE account are a little bit different. And it is important to remember that you are now reporting it to the IRS, and the IRS can look at the qualified distribution disability expenses, and they will determine if it does or does not meet guidelines. This is a quick compare of distributions from a special needs trust and ABLE account. So you see all my icons here. The ABLE account and the special needs trust are not, those are not the accounts that we can pay for, right? But you'll notice that I have a house and food under ABLE account, and I don't have a house or food under special needs trust. And so that if we take anything away from today, it's that an ABLE account can pay for housing expenses, and that a special needs trust cannot. And you can fund a special needs trust and still have an ABLE account, and the special needs trust can fund the ABLE account to pay for rent. So that's important. And I want people to, if we do nothing else this evening but talk about how that's done, I am okay with that. It is important. It is huge for the world of benefits and individuals with disabilities and their families. It's unique. It's just very, very different that something that says you can't pay for rent over here allows for you to make a distribution to something that can. And so this is just a quick chart. By all means, I think if you can make a distribution from the special needs trust, you could probably make the same distribution from the ABLE account. The only one I would maybe not do is travel and vacations, but as long as you can fit it into kind of one of those three categories we talked about, I think you'd be good. So, and I want to stop here before we talk about comparisons and see if anybody has any questions about distributions from an ABLE account.
How are distributions reported to the IRS?
So just as when you file taxes and the beneficiary's taxes, you'll be asked the question, is there an ABLE account? And you would report the types of distributions made from the ABLE account. And then if they ask those additional questions, you're definitely reporting the ABLE account. And then the IRS can ask additional questions as they see fit.
Does the person who has a disability have to manage the ABLE account themselves, or can a trust or someone else manage the account on their behalf?
There are authorized users. And so the beneficiary, if they're unable to manage that ABLE account on their own, they can have an authorized user on the account Trustees typically do not serve in that role. Conservators, power of attorneys, rep payees are usually the authorized user on ABLE accounts, parents.
And then if the special needs trust ends up paying rent, let's say $500, does the benefit that the beneficiary received simply get cut by that amount upon discovery, or is there a larger penalty?
It is cut by a third. So whole calculation regarding it. And there are some trustees that'll say, yeah, it's fine to cut the SSI by a third because paying the rent is better for the beneficiary. But typically trustees, if they're receiving SSI, are going to say, no, we're not going to pay rent. And Social Security can determine that rent to be income and then reduce the SSI by a third.
Is there a maximum amount that you can contribute to a special needs trust?
No. So unlike the ABLE account where there's a maximum contribution limit of 17,000 unless the person is working, there is no maximum contribution limit to a special needs trust.
Right.
There may be minimums on either what you have to have in it or what it needs to be to maintain, but there's no maximum. So we're going to go and compare special needs trust and ABLE account. So it's important to remember that both the special needs trust and the ABLE account are financial planning tools intended to work the same way, to give individuals with disabilities the ability to save without losing their public benefit eligibility. We talked about that, right? So special needs trust is an exempt asset, ABLE account's an exempt asset. They're the same in that way. It is the personal financial situation of the individual and their very specific circumstances that will determine which is the most beneficial, or if the answer is both. And so a special needs trust may be better when the annual contribution limit exceeds 17,000. It may be that they're getting a personal injury settlement. It may be that that life insurance policy is over 17,000. When multiple accounts are necessary or preferred, grandma and grandpa want to set up a trust and mom and dad want to set up a trust, but they don't want the same remainder beneficiaries. You can have multiple special needs trusts. When the disability occurred after the beneficiary turned 26, there are many, many, many individuals with disabilities that did not become disabled until they were 40, 45, 50, 60. And so they would be ineligible for an ABLE account. As a special needs trust may also be a better option when you need a trustee, when that person needs a trustee, somebody who is making those decisions, who understands public benefits, who understands services, who is going to protect the interest of the beneficiary. There may be some times where you don't necessarily want your loved one to have $17,000 every January 1st because it might be gone January 2nd. And so a special needs trust is a way to have some oversight to those funds that can still pay for many, many things and still be there. And the trustee is going to administer those funds for the benefit of the beneficiary, but having that oversight. Compared to an ABLE account, the beneficiary desires or their family desires to have more autonomy and independence and can responsibly manage the account. Can they keep receipts? Can they make sure they are making good qualified disability expenses? Are they able to track those expenses when smaller amounts of money are involved and when wanting to use the funds specifically for qualified disability expenses, when wanting to use the funds for rent, for those housing needs? An ABLE account may be better. A special needs trust and an ABLE account may be used when all criteria for a special needs trust and an ABLE account are met, and the proceeds can be divided between the two financial tools. So supplemental needs from the special needs trust, qualified disability expenses from the ABLE account, and as I said, you can move funds from the special needs trust to the ABLE account. Many of the beneficiaries that I work with have both a special needs trust and an ABLE account. Some of them call me every January 2nd and say, it's time. move my funds over and we transfer the funds to the ABLE account. Some want them in parceled out, right? They want it throughout the year. Others were educating about the ABLE account. So maybe we can't make that distribution. It's not in their best interest, or it is for rent or utilities. And so we talked to them about their options. When did you become disabled? When are you able to make good decisions regarding how to make distributions? And we walk them through or help them decide if an ABLE account is better for them. And then we have those that want nothing to do, especially with ABLE accounts. They would rather have us make decisions or have their co-trustee make decisions. And while they are eligible for an ABLE account, it is too burdensome to them because it is another thing they have to track and another thing they have to report and another thing they have to worry about. And so we are supporters. MSNT, I've always been a supporter of ABLE accounts. When I heard about them back in 2012 and started watching them kind of walk through the to become a law, and I'm excited that they're here. I'm excited that there's another exempt asset available to individuals. There are its pros and its cons, but there are pros and cons to special needs trusts too. And I think that in many situations, both are going to be useful tools for individuals and their families. My next slide is just my contact information. I want to stop here and take as many questions as I have. But before I do that, my contact information is here. And then at the very end of this slide, or at the very end of this presentation, I do have some quick links. So Midwest Special Needs Trust, the MOABLE, Social Security rules for Special Needs Trust and Social Security rules for ABLE accounts, the National ABLE Alliance, the Special Needs Trust Answers or Special Needs Answers. And then I also linked Missouri Medicaid and the IRS. You visit any of these, they're going to provide you with substantial information on special needs trust and or ABLE accounts, and probably be completely overwhelming in the amount of information that you're looking at. But please feel free to call me or email with any questions that you may have after this presentation or as you're watching it later. It has been, if I don't get a chance to say thank you, it has been an absolute joy to spend my evening with you all. Thank you so much. And I'm going to open it up for questions, and we'll just take the rest of our time that we have here this evening. So again, thank you so much for your time tonight.
This is a great question. Someone set up an ABLE account when their daughter was under 18, and now she's going to be 18. Do there need to be any changes to that account?
I don't think so. So as long as your daughter is still considered disabled under the Social Security Administration, I don't think any changes need to be made to the ABLE account.
And how does one make a withdrawal from an ABLE account?
There's a couple of ways. They will do, I know that they have like a Visa card that you can make distributions to and use that card much like a debit or credit card. You can do it by check. You can make distributions by EFT. You basically enter it into their system and the funds go where you tell it to.
If a family member is named, can they elect to have a professional administrator after it's set up?
Oh, sure. So we're kind of bordering on legal advice, but you can have successor trustees named. And in fact, one way that we see some trusts come to us is that when the trustee of the special needs trust no longer wants to serve, they can list Midwest Special Needs Trust or Missouri Family Trust or Edward Jones, whomever they're choosing as their next trustee, as the successor trustee. And then the funds are sent to that trustee and administered accordingly.
Can assets from, they're calling it a Medicaid trust, but I'll call it a special needs trust. Can those assets be transferred to an ABLE account?
Mm-hmm.
Okay. And are there any fees that are typical for a professional trustee administrator?
So I will tell you, I recently did a fee analysis comparing pooled trust to professional trustees, and vast difference in the amount of fees that professionals trustee charges. You can find our fees on our website. If you would like more information on specific fees for other trustees, I'm happy to provide that. The fees for the ABLE account are also available on their website.
Is there a Medicaid payback policy for ABLE accounts after the beneficiary passes?
There's some deductions first, so you can pay for things that accrued before the beneficiary passed. You can pay for funeral expenses. There's a couple of other items that can be paid for, and then the Medicaid payback. And the Medicaid payback for the ABLE account is only during the lifetime of the ABLE account versus the special needs trust, which is for the lifetime of the beneficiary. So a little bit different provision, but there is a Medicaid payback provision.
And then can you say a little bit more about your company and what
So
you do?
yeah, Midwest Special Needs Trust we're unique in the pooled trust world. We were established by state statute in 1989, and we're a nonprofit pooled trust organization that serves as trustee for special needs trusts. We also have a charitable grant program, which I'm happy to provide information about via email or phone call. And so what we do is we administer funds down to about $500, and then we close the trust sub account. Or if the beneficiary passes away, we close the trust. Our fees are reasonably low compared to other pooled trusts and definitely compared to professional trustees. Our investment options are similar to the ABLE account. So if you lined up investments with the ABLE account and investments with MSNT, you're going to see a very similar list. But we are essentially a quasi-governmental entity, meaning we follow all of the state rules regarding how our board is appointed and some of the rules regarding our audit and our financial disclosures, but we don't receive any state or federal appropriations. So unique in that way. And you are welcome to visit our website and learn more about us. We have a 30-year history book on there that is fascinating if you're interested in pooled trust history, but we were one of the first in the nation to be administering special needs trust as an organization, and definitely the first in Missouri.
If the person dies and has money in the ABLE account, can it be left to someone else?
They used to tell you yes, and then I learned not too long ago, a couple of years ago, that after all expenses and fees and Medicaid payback, if there are still funds remaining in the ABLE account, it is actually goes through probate. So it is considered probatable at that time. So if there are any funds in the ABLE account, you can't leave it to somebody. It has to follow probate rules and is essentially the heirs of the beneficiary.
Can assets from a Medicaid/special needs trust be transferred to an ABLE account? And yes, they can.
Mm-hmm.
Yes.
Absolutely.
Thank you, everyone, for being here this evening and for all your great questions. Really, really good questions.
Yeah.
Got us thinking, kept us on our toes, and made it very interesting. We really appreciate you all. Thank you.
Yeah, thank you so much again. And please feel free to call or email with any questions that you have. And thank you, everybody at the St. Louis Arc, for allowing me to be here this evening. So
Thank you, Casey.
all right, bye-bye.